Welcome to my channel. I will be with you guys in a moment. Let me finish getting everything set up here. Still trying to get used to this this streaming stuff, so ooh. Yes. Okay, let's go. Hello, if you're tuning in to the stream, give me one moment. I will be with you guys in just a moment. How's everyone doing? If you have any questions, put them in the chat. Don't be afraid. I'll get to them here throughout the stream. So go ahead and put those in the chat. And then let me know about topics you guys want me to talk about. Remember, I'm here trying to serve you guys the best that I can. So in order for me to make videos you guys want to learn about credit, you got to go ahead and let me know. I'm here to try to make your lives a lot easier. All right, almost. All right, welcome back to Credit Recovery. Let's go. So I'm excited. It's been a moment since I went live. So here we go. If we go ahead, if you need help with rebuilding or repairing your credit, go ahead and contact me. I will put my contact information in the description so that you guys can be able to get a hold of me, and I can do that. And throughout the stream, you'll see I'll be going through the credentials where essentially um, that essentially you guys can understand I'm pretty much a credit analyst. What does a credit analyst do? A credit analyst pretty much makes decision on loans, whether it's an auto, personal loan, credit card, house, etc. Yes, that is me. I am that person, and I'll be helping you guys here today. So, what's going to be on the agenda today? We're going to go ahead and talk about how to build your credit properly, because there's just a lot of misinformation and not a lot of instructions on how to build your credit. We're going to go through what lenders look for when it comes to building your credit. And we're going to do some reaction videos if we have some time. And then I want to get to your guys' questions. Again, I'm here to help you. So put your questions in the chat so I can go ahead and help you reach your credit goals. All right, so what we're going to be doing here today, give me a moment. All right, seeing the stream is lagging, is higher than recommended. Definitely not. Working hard. Let's see. Give me a moment. I want to. No. I just want to see why it is. Oh, my internet is great. Let's see here. Everything is fine. I don't know why I'm getting a lag here. Let me know how's the audio. Go ahead and put it in the chat so I'm aware, and we'll go ahead and go from there. All right. Okay, so without further ado, we're going to go ahead and get started with how to understand credit as a whole. So let's hop into it. All right. All right, here we go. So this is Credit 101. Let's get started. All right, what is credit recovery? Credit recovery is pretty much an organization that's dedicated to helping people build, reestablish, while also giving them the tools and the knowledge to help them get approved for loans. We're pretty much an expert of in these industries of type of loans. So how I mentioned in the beginning, mortgages, homes, personal loan, lines of credits, credit cards, all those you you ask, we've almost done it all when it comes to consumer. So this isn't anything to have to do with business or commercial. That is something that we have limited experience, but we do have experience, but not enough to talk about it. But this we definitely do. So again, you need help with the credit, book a session. Let's go. All right, let's get back to it. All right, next. All right, here's my credentials. Like I mentioned, so I'm a certified credit counselor. I have my certification as a mortgage underwriter or mortgage credit analyst, pretty much that I'm able to make decisions on loans. Here's another certification, another certification. This is where I've worked as a consumer loan underwriter or credit analyst. They go by both of those names. Here's another place where I worked at a bank, here as a credit analyst for a finance company called Tiffany. And then here's my mortgage underwriter, where I've been a mortgage underwriter. All right, so pretty much what we're going to be going into is we will go into about here. So we'll start from understanding your credit report, going to protecting your credit score. So let's go ahead and get started. Okay, so understanding your credit report. Let's go, baby. Okay, so pretty much your credit report is just a detailed information of how you paid your loans. They'll have information such as your personal information, employment information, your inquiries, any bankruptcies, how you've paid on your loans, and information about that. And we'll get more into depth about that. But that's just pretty much a summary of what a credit report is. Let's get started. Or let's continue, I guess I should say. All right, so like I mentioned, your credit history is pretty much a record of how you manage your credit and debit over time. And like I said, it's information about yourself, your credit cards, home loans, auto loans, other loans. A next thing is going to go ahead and be outstanding debts. And give me a moment. Your outstanding debts, so pretty much how much you owe on your loan. So how much you owe on your credit cards, your house, your autos, personal loans, student loans, all the loans. Let's go. All right. Let's see here. I want to make sure because I keep seeing the stream is All right, there we go. Okay, so continuing on, and remember, if you guys have any questions, put them in the chat. Let's go. All right, like I said, your payment history plays a part to your credit. So how you've paid all those loans. The other information that I went ahead and mentioned earlier is on there. All right, so how to get a copy of your free of your credit report. So you can go to this website called annualcreditreport.com. It'll give you access pretty much to all the credit bureaus at once. Sure. Yeah, so it'll give you access to all your credit reports all at once. If not, you can always go to Experian.com, and then I'm going to show you how to actually get to those websites instead of just seeing it in this presentation. So let me make sure the next screen is. Nope, we're going to stay back. Okay. Annual credit report.com. So this is essentially how the website looks like. This is how you'll do it. So like I said, free weekly credit reports. They used to be yearly. This is really nice. So you can check on it more frequently. You just click on this. Let's just go through like a mini process. All right, you're gonna request your credit report. Boom. You're gonna fill out all this information, all about yourself. Also, we're not gonna do this on stream because I ain't trying to have you guys take my information and ruin my credit. Stop playing with me, yo. Like, put some respect on my name. Remember, like, subscribe, put your comments about credit, that what you guys want to learn. All right, let's get back to it. So that's essentially how to get it through them. I always recommend go through Experian. They do have the free version where essentially you could pay. Oh, not free purchase. A free version you can pay. That's hilarious. We're gonna clip that. There's a free version which you can just see your credit report just through Experian, which is honestly preferred. Or if you want to get all three, if you pay for their subscription, you get access to that and then plus other tools. So, but if you're not, let's just go ahead and register for the first time. Again, we're not going to register for realsies. Stop playing. Okay, let's see. Okay, so essentially this is how you do it. I'll ask you for this, and then next screen is going to go over how to, it's going to ask you questions. They'll try to trick you, so you got to stay on your toes. Let's go. So that's essentially how you do it and how you will go ahead and get to those websites so that they can go ahead and help you get that credit report. So let's do it. And then what we'll also be going through is going to be if you want to dispute it, how to go through that process. That is something we'll take some time to go through. Okay, let's get back to it. All right, so we touched briefly on it. This is Experian, Equifax, TransUnion. They're the three major ones. So when anybody talks to you about the credit reporting agencies, these are the companies that have it. I hate that they have this information and we have to play this game back and forth, but that is neither here or there. We will save that for another video. All right, let's go. All right, how to build credit. So let's talk about this. So it's pretty much how to build your credit. This is the credit algorithm. How you guys are used to seeing like the TikTok algorithm, YouTube algorithm. This is pretty much an algorithm of how to build your credit. We're going to go into more in depth of what is on this graph. Okay, so we got payment history, which as we can see is the biggest pie. Amounts owed, which is the next biggest pie. Credit history, credit mix, and new credit. And we're going to go over that here in the next slide. All right, well, we'll see if we're going to go over it in the next couple of slides. But for the meantime, let's Let's change subjects for the time being. Okay, so let's talk about credit utilization. So, credit utilization is essentially an important factor when it comes to building your credit. It's the one that's going to affect your credit score the most because people will use credit cards more often as opposed a personal loan or an auto loan. Um, so essentially, credit utilization, how you do it is you calculate the amount, how much you owe divided by how much your credit limit is. So here's a nice little example. So if we have a calculator, and let's say you have three credit cards. Oh, look, we're going to use this example down here. You have 10,000. You times it by 30%. That is the easiest way to know. That is pretty much your root. Your In order for your credit score not to dip. In order for your credit score not to dip, you can't pass this 3,000. Again, you can pass it if you want. It's your credit card. But if you're playing this ridiculous game with the credit, where essentially you have to, if you're try to increase it, you can't exceed 30%. So again, whatever your credit limit is, if it's 10,000 for example, that's going to be 3,000. So this doesn't matter if you have one credit card, five credit cards, or 10 credit cards. That equal 10,000. You pretty much just add up all your credit limits and then you times it by 30%. And if you see you owe more than what that 30% utilization is, then you're going to want to start paying down your debts. Realistically, you want to be around 10%. So if this is the case, you don't want to spend 1,000 if you have a $10,000 credit card. Really? Capiche? Capiche? Put ones in the chat if you guys understand what I'm saying. And let's go. All right, back to this video. No dancing. Ain't nobody got time for monkey business. Even though my name is George. All right, here we go. Going over the credit algorithm. How we talked about payment history. Never stop making your payment. Guys, get in. Huddle up. Payment history. Biggest factor. Don't forget it. Right? So payment history is your biggest factor when it comes to approving you for a loan and for your credit score to increase. When we're reviewing your credit report and we see you have missed payments, you have a high likely chance of being declined because we're seeing that essentially you are not stable right now. You're going through a financial difficulty. So last thing you want to do is go past due. Okay, so the next is going to be also what goes into your payment history a little bit more in depth. If you have collections, because again, collection is correlated to payment history because you're supposed to be paying your debts on time. So if you're not paying them on time and they're collections, you can see how that affects you. Another thing that affects you is how much you still owe. So let's say if you're behind three payments, $300, right? And you make one payment. That's great. You're getting current, but you still have an outstanding amount you owe of $200. And you're still now, you went from 90 to 60 days past due. So you are still past due at the end of the day. All right? Capiche? All right, great. Oh, God, I'm hungry. All right, anyway, it's not about me. It's about you guys. It's about trying to help you get your credit score and help you guys understand credit as best as possible. So let's continue. All right. So that's pretty much a little in depth about payment history. All right. Next one is the next one is this one. All right. Name one of the credit bureaus. Put it in the chat. What counts for the highest percentage of your credit score? Put it in the chat. And what website can you get your free credit report from? All right, I'll give you guys 5 seconds. 5, 1, 0. Okay, moving on. All right, here we go. Going over credit scores and loans. All right, so essentially there are two types of credit score models. Think of the credit score model as two different type of car levels. So an easy one for people to understand: there's Mercedes Benz, which there's a 300, and then there's the AMG series, right? Two different types, same car, different models though, right? So FICO is the more one that is used the most. Every lender uses it, which I'll show you through looking through a credit report here today. Vantage Score is slowly starting to get used. Mortgages, it just started being implemented recently for mortgages for that to be implemented. So that is something new. I'll be making a video about that here soon. Okay. So that's essentially, we'll go over it more in the next slide. Normally, but just kind of a summary of what the difference is. FICO, which is going to be the one here to the left, indicates credit worthiness and how likely are you to stop paying your loans. With Vantage Score, essentially, it uses the FICO as a foundation, but it's been more updated to be able to determine how much credit worthiness and how likely are you to default. Which then you talking to yourself, you're like, well, if that is the case, um, that Vantage Score is better, because that's really what it's sounding like, then why are they still using FICO? It's because everyone's been used to FICO. That's why. But it's slowly changing. And then also because FICO is getting real greedy with their money, and they've been charging, I think they charge the lenders like $90 per application or per person. So if you have two people, that's $180. If you have four people, that's $360. So when you go get a mortgage and you got four people, yeah, they charge the lender for that, which then they charge you for that. So when you look on, there's a document when you receive a loan estimate. This is for a mortgage. It's a loan estimate. It pretty much gives you a breakdown. So when you're pre-approved, they're going to give you what's called a loan estimate, or an LE, which then tells you, if you look on Schedule A, you will see that those are the fees that they're approximately going to charge you. So you have a great example of what is going to be charged outside of everything else. So that's a little, little background, a little bit about mortgages and how to read those type of documents. Let's get back into it. Let's go more into depth. Okay. Also, the difference is what they also measure for your credit score. So in the next slide, we're gonna go over what is the difference between that. So let's take a look. All right, so this is the difference. So as you can see, FICO, their biggest factor is going to be payment history. With Vantage Score, they care 41%, which is honestly a bigger improvement. Makes sense because you're borrowing money. FICO, which Experian uses, amounts owed is the second. For them, is going to be a tie between credit utilization and age and credit mix. So credit utilization, we touched about it. So this is why it's important, and especially if it's shifting towards using Vantage Score, which you can get your Vantage Score through Experian, or also the lenders. The lenders, when they tell you, hey, sign up to get a free credit report, that's not really a free credit report. Well, it is free, but it's not the one that they use to check your credit. So, yeah. And then your age and mix of credit is the next one in this case. So how long you've had credit for, and do you have personal loans, credit cards, autos, mortgages? You just need one of each category, right? So you have what is called revolving. Revolving are store credit cards, gasoline credit cards, a credit card from a bank or credit union, one from a credit card from a financial institution like Capital One. Those are revolvings. You have lines of credit and home equity lines. Those all counts as a line of credit. Installments are going to be your personal, auto, mortgage, jet ski, boat, RVs, travel trailer, a motorhome. Those are all installment loans. So you're going to want to have one of each in order for you to get to the highest credit score that is available. So, yep, that's essentially. Okay, so going back into this. So to reach the highest credit from each of the credit score, this information has been made available to the public of how your credit score is calculated. But remember, FICO is the credit score to use since lenders use that score model over Vantage Score. So just in case if we're not going to go over this, so around payment history, so for experience, so payment history we touched a little bit on it previously. Amounts owed. So your amounts owed falls under all your debts that you owe. Everything from what you owe as a whole, so like how much you owe on your credit cards, auto loans, personal loans, mortgages, boats, etc. And then how much you owe individually to those loans, right? So you have an auto loan for 15,000. How much do you owe? Oh, you only owe 1,000. Okay, great. Your credit score is going up. Oh, you have a house. You barely just started on it. Yeah, you owe a lot. We're gonna dip your credit score. Hey, you have a credit card. Oh, you have a $25,000 limit. Oh, a $25,000 limit. Oh, you're using half the limit, which ends up being 12,500. $12,500. Oh, we're gonna dip your credit score because you're overutilizing your credit card. Because again, remember, you can't be over 30%, like I mentioned. So that's essentially what goes into amounts owed when you're looking at it. So making sure not to owe, I would say with installment loans, make sure if you can get to under at least 70% of what you owe, you'll see your credit improving. So if you get there really quickly, you'll see your credit score actually increase a lot more faster as opposed of letting it go through time. Let me know how we're doing on the chat. I want to make sure audio and everything is great. And again, like, comment, subscribe, and put your questions in the chat. Even after this live, I will answer those questions, but in order for me to answer them, you gotta have questions, right? So, so that's essentially about amount owed. Let's hop into the next one, which is going to be credit history. Credit history is pretty self-explanatory. How long you've had credit. When was the last time you opened credit? Have you closed any accounts? What else will fall into credit history? I think those are it essentially. So why I mentioned credit history of when you open it, because what tends to happen is if you've had credit for 5 years and you open up a new account, it will decrease it because you opened up a new account. It brings down your credit history because you have to now start up with a new loan. So that's why opening new credits is not always advised because of that. So if you do, it's always better to get them all roughly within that year that you're getting. So if you get an auto loan now, maybe towards the end of the year, get a credit card because you don't want to open up too many accounts because then you have inquiries and then that goes ahead and affects you. So, all right. So let's get into the next one, which is going to go ahead and be credit mix. Credit mix is pretty much what I talked about, having revolving and installment loans, right? So making sure you have an equal balance. That's pretty much what it is. Nothing more into deep about that. So the last one is going to be new credit. So new credit is essentially going to be, again, it's attached to credit history. So essentially, if you open up a new account, you'll get an increase in the points because you opened up a new credit. But it will go ahead and dip your credit score because you just opened up a new account, right? I know it makes no sense. Oh, but whatever. So essentially, that new credit also accounts for your inquiries. So how many accounts have you opened in the last year? How many places you've applied for? How many have fallen off because your inquiries stay on your credit for 2 years, baby, 2 years. Thank God. I wish negative information like missing payments and collections only stayed on for 2 years on your credit. So, but anyway, there's only wishful thinking people can have, right? So let's go ahead and continue here through the slide. Vantage, we won't really go into, we weren't going to go really into a depth about it because no one's really using it right now. But essentially, I'll at least show you it. So we have payment history that counts for 41, age and mix 20%, credit utilization 20%, new credit 11, how much you owe as a whole on your balances 6%, and then available credit 2%. So that is connected with credit utilization. So if you have that $25,000 credit card that I mentioned and you've spent 24,000, yeah, you are going to help hurt your available credit. All right, moving forward. Okay, so here is a screenshot of a credit report for a mortgage. As you can see, I highlighted right here in yellow and then in red. So essentially, as you can see, there's nothing that says FICO score, or not FICO, Vantage score. You see FICO, and these are all the different ones. This FICO is in, they also go by Isaac. Look it up. But essentially, this is all of them, right? As I mentioned, you don't see that. The next slide, we're going to go into a little bit more so you can see and understand why this one is highlighted in red. Okay, how to find your true credit score. So essentially, how you do that is you're going to want to sign up, which we went ahead and did that here today, where you'll sign up for Experian. Once you do that, it'll take you to a summary. You're gonna click on credit and then credit overview. Once you're there, you're gonna scroll all the way to down until you see additional FICO scores. And as you see it, you have the true FICO scores they use for credit cards, autos, and mortgages. We'll go through that in the slides. I know that's here in the slides somewhere. We'll get to it. But as you can see, FICO score 2. And in the next slide, you'll see why it's in red. Version 2. So as you can see, this information is correlated with this information. So now you understand that those two are one and the same. And when you are fighting or maybe arguing with your lender, hey, I see on my credit report that I am at 800. Well, we see you're 750. This is the reason why, because they're using different models. Remember when I talked about the Mercedes, and there's a C300 and then a Mercedes AMG? That's the same thing. We're talking about the same topic but different things. That's essentially a great way to see it, right? So let's continue on here. Okay, credit score algorithm, which I guess we're gonna go through it. Well, we went through this. We can skip this. Thank God I saved you guys the hassle. All right, here it is. Here, what I was mentioning, the credit scores that the lenders see. So we went over the mortgages. So whenever you are doing a mortgage, FICO score 2 is what gets used for mortgages, or when you apply for a home. For credit cards, FICO Bank Card 2, 3, and 8 for credit cards. And for auto loans, we're looking at FICO Score 2 and 8. This is my favorite car. It's a Nissan Skyline. Remember it, just in case if you see me or maybe a subscriber bought it for me. Wishful thinking, right? So again, take a picture of this, screenshot it. I don't give a... You do what you got to do, but remember this. So whenever you're arguing with the lender, stop arguing with the lender, because unless you're looking at this and you're paying for the subscription through Experian, you're not going to have access to this, because you can ask them. So you'll ask them like, hey, so what is the FICO version you guys use? So if it's an auto, they're like, oh, we use FICO score 8. Like right now on my lender, we're using FICO score 8 when we're reviewing auto loans. Oh, for a credit card, which one are you guys seeing? Oh, FICO Bank Card 8. For loans, oh, FICO score 2. And then you can go ahead and look on there and see that essentially, oh, that's why they see that credit score. so then you guys get on the same page. All right, let's continue. All right, here we go. Giving you guys a fucking test. I'm here to test you guys. Let's get it. All right. So, let's see. What credit score models do mortgage home loans use? Which credit score algorithm do lenders use to approve you for a loan? What website can you access the credit scores that the lenders use? Put it on the chat. Put it all in the chat. Let's see who's the smartest. Oh, hello. Welcome to the stream. All right. Continuing on. Whoops. All right, let's talk about loans. All right, we went over this briefly, but again, installment loans. Installment loans, also known as installment credits, are close-ended credit accounts that you pay back over a set period of time. They may or may not include interest. So obviously, sometimes you'll see that if you get an auto loan through a car dealership, you will go ahead and get like a 0% interest for the first year. You'll get Experian is the best. Experian is the best. We're gonna do that. We're gonna do a little of that. We're gonna pin this comment. We'll pin that message. Experian is the best. Remember, any question you guys have, put them in the chat. Put them on the chart. All right. Continuing on. All right. So essentially, right here are a list of those different type of installment loans, which I talked about, which they can be by secured or unsecured. So secured, think about an auto, like you're holding on to something, you're trying to secure it so no one takes the auto loan. Unsecured is the opposite of secured. They recently just introduced buy now, pay later. So all your Affirm, Klarna's, Afterpay that you're doing monthly payments. That will show up on your credit report now. So do not let those go charged off. Let's continue. All right. Revolving, or known as open-ended loans. So we have open-ended loans, which are pretty much, you get them to a bank or other financial institutions like a credit union or a Capital One. Essentially, you can use it multiple times over and over as long as you don't stop paying it, right? They pretty much don't close till either you decide to close it or the lender decides to close it for whatever reasons. And again, these are the different types of open-ended / revolving loans. Credit cards, personal loans, home equities. All right, moving on. All right, either way, wanting to increase your credit score or you're new to credit, both types of loans are important, but installment loans have the best. All right, remember that, because installment loans, so that's the thing with credit. With open-ended or revolving loans, if you don't use them often, your credit report won't increase. But with installment loans, you are forced to have to pay it each month, right? So that's why it is better for you, because it shows consistency, and it also goes ahead and shows you it also shows when you're going to lenders that you know how to pay stuff on time. Because again, payment history is the best. You see, it's becoming full circle. Full circle. Let's go. Okay, let's move on to the next slide. All right. You get some more tests. You get some more tests. You get in more tests. Yeah, you didn't know you were going to be quizzed. I got to make sure you guys are learning. Come on. What's the point of a teacher, a mentor, an expert, a guru, a me. Come on, let's get it, baby. Ooh, I ain't a rapper. Stop rapping to me. All right, let's get back to these questions. Okay, so first one, what is an installment loan? What is an open-ended loan? Which type of loans is the best to build your credit? Put it in the chat. Let's go. All right, final slide. Let's go. Let them slide on you. Slide on you. Bam, I'm killing it. All right, this is how to protect. This is something that not a lot of people I see go over when it comes to building your credit is how to protect your credit score. This is very important because you work so hard to build it and someone steals your information. That's annoying. All right, here we go. Protecting your credit score. Let's do it, baby. All right, here it is. These are services you have for yourself to protect your credit. So you have a credit freeze, which I always recommend. If you're not using it, it's better to freeze it than not have it. You can get that done through Experian, TransUnion, and Equifax. You can go ahead and get that done. Disputes, that's also a way. So if someone opened up an account on your behalf and it was unauthorized or it was fraud, you can dispute them. Fraud alerts. So when you do go through fraud where someone steals your identity, you can get what's called an extended alert. I wish they just had this in general, where the lender has to call you in order for them to give you the loan. So they got to verify you. So you may have gone through this at some point. So that's essentially what a fraud alert is. The last one is credit monitoring. So that's pretty much when you receive notifications about your credit. I get notifications about the credit or about my own credit. You know what has happened on a monthly basis. I wish it was not on a daily basis. Unless your credit is bad, then I can see why you want to get it daily. But that's essentially what credit monitoring is. Ooh. All right, let's continue. All right, so like I mentioned, credit freeze is pretty much that helps protect you from going through fraud. The only thing about a credit freeze is essentially where if you are applying for loans and you don't unfreeze it, you will get turned down, and then you will have to. The good thing is that it's not an inquiry because again it's frozen. No one has access to it. No one can see it, so that's why it's not an inquiry. So you can always unfreeze it, reapply again with no problem. See, But again, an inquiry should be the last thing you're worried about because again, that falls under new credit, which counts for 10%. We're not caring about that right now. We care about payment history. All right. All right. Let's continue. Okay. Disputes. We talked about them. If there's any inaccuracies, someone opens up an account, any errors made by the lenders, you can dispute it. So if you know you paid a loan off and still reporting, you can just dispute it and be like, hey, I paid this B off. You have to provide proof. That's the thing. Whenever you're disputing, you do got to provide proof. For fraud, it is up to the lender to provide proof when it comes. But if there's things that are error like that you paid off the loan, you're gonna need to provide that proof. All right, it's continuing. We talked about fraud alert. We talked about credit monitoring. Let's continue. Again with the test. Oh my God. I know you guys are tired, but I ain't tired. Come get this work, baby. Come get this work. Again, put it in the chat. I also want to know your questions that you have about either how to get approved for a loan or how to report your credit. Remember, I am a credit analyst. I approve loans for a living, so I understand that process very easily. So again, guys, take advantage of me. It's one of the only times that I'm okay with being taken advantage of. So ask your questions. That's why I'm here, right? Boom. And if you're new to the stream, like and subscribe, and comment. Duh. And if there's other people that can use my information, you know what to do. Share that. Share that. Share it. All right, there we go. Let's get back to it. All right. So again, put the answers in the chat. Okay. All right. Well, that is going to be it for today's lesson. You guys can put the books away. I know you guys are relieved. You're like, oh, thank God, no more tests. Don't worry. I would be exactly like you two. Ain't nobody got time for that. But you got time for it today. Let's go, baby. All right. So, next thing that we're going to go ahead and do is we're going to explore. Actually, no, we're going to take a look at a credit report. And I'm going to show you how to read your credit report through Experian. Just because, again, not a lot of people understand how to do that. So, I am well equipped to help you with that. So, that's what we're going to be doing now. Again, at any point, remember, put your comments in the chat. Because, again, I want to be able to help you guys with your credit. And I can't help you unless you let me help you. So, all right, let's see. Oh, here's a question. Look at this. Oh my God, that's what I'm talking about. We're gonna pin that. Look at this. As a 16-year-old, we got a 16-year-old here trying to learn about credit. Let's get it. How do I build credit if I'm 16? You can't. You can't. I'm sorry. Why I say this is because you're not legal. You're not legal to make, but you have to make 18. You have to be at least 18 to get a loan. But do you want me to give you the secret? You want a hack? You think you can hack it? Let's go. Put a like on the chat. I want to see it in the chat. But let me tell you how to build your credit. So first thing you want to do is, you got a mom, right? We all got a mom. So, or a dad. Yes, we can't forget about the dads. Dads are very important. So essentially what you're going to want to do is you're going to want to tell them, hey, I need you to put me on as an authorized user. What is a authorized user? So pretty much it's someone that can use the credit card on their behalf. But hold on. Doesn't mean that you get to use their credit card. You ain't paying for it. Fall back, 16-year-old. So essentially, they're going to put your name on it. And when you get to 18, instead of starting at 500 like I did, it's okay. But this is why I created my channel, to help you guys. So my frustration becomes your relief. So I am protecting and shielding you guys. You're welcome. Let me get some likes in the chat. Let's go. Continuing on, right? So they'll put you on an authorized user. So by the time you are 18 and you decide that you want to apply for a loan, you already have a 700 plus credit score. Imagine. Let me tell you, 500 is low, so a credit score ranges anywhere from 0. I don't really see a lot of zeros, so let's just say 300s. I've seen 300 credit scores to 850. So 850 is the highest, so if you're in the 700s, you're kind of like in the middle. So as you can see, that will happen. When you do that. Once you're 18, what I suggest is you get what is known as a secured credit card, which pretty much means that you give money to the lender, and they're going to give you a credit card. So if you give them $200, $300 is where normally you can do for a secured credit card. You can do as high as $25,000, but I don't recommend it. So, but anyway, you're going to do that, and that's a revolving line. So if you came late into the stream, a line or open-ended loan is pretty much like a credit card, which a secured credit card works. A credit card from a gas station, from your favorite store. So if you're 16, Most likely, Microsoft or PlayStation has a credit card. You should tell your mom to apply for one. Oh no. I'm sorry, Mom. Sorry, your mom's probably gonna hate me. But it's okay. I'm here trying to help you. You're welcome. What I will accept as gratitude if you share. That's all. Share and subscribe and comment and like and engage. Do all the engagements. That is how I like my form of repayment. Once you get your revolving, you're going to want to now focus on an installment loan. You're not going to. The only way for you to apply for an installment loan, like for a car, everybody needs a car. Installment loans is one of the best ways to build it because you're paying something each month, so it shows consistency. With a credit card, you can use it all the way up to the top. Sometimes you can use half of the money, sometimes you won't use none of the money. It's not dependable because it is not being utilized. Lenders want to see you using your credit. The credit algorithm wants to see you using your credit. So that's why an installment loan works effectively because you're always paying it each month no matter what. Is if you want to get a car, putting 20 to 30% down payment is how you are going to get approved for an auto loan, because unfortunately if you just turned 18 and you don't have any credit, essentially what will happen is that um, they won't give you that because you don't have enough credit history. I declined like 2 to 3 applications today because they didn't have credit, and I was just like so sad. I was like, oh, I want to approve you, but this is what our rules and guidelines are when it comes to approving those loans. Um, so if you put 20 to 30% down, so how do you find out how much that is? So you're gonna want to do whatever the price that they're selling the vehicle. So if they're selling it at 10,000, do times 20 and then hit equal or 30. So if we do 20%, that's going to be $2,000. So if you have $2,000, you're buying a $10,000 car. That shows me, people like me, that oh well, look, he may not have a lot of credit, but he's willing to put 20% down on a car. Who am I to stop him? Also, your employment history. So wherever you're working at, you have to also be able to afford the loan, and also how long you've been at your job plays a factor. So you're going to want to be there at least for 6 months. If you're there for 6 months, you're golden. Nowadays, they want a year, but if you're 16, by the time you're 18, things are going to change throughout the industry. So, thank you so much for your questions. Anybody, any other questions, please put it in the chat. Again, help me, help you, help us, which is everybody. So, let's get into now how to read your credit report. Okay, so we have Experian. So this is one from a client. So if you download it, again, go to Experian.com. There's an option to download. I'll make a video about that in the future. But let's take a look at this person's credit report. So as you can see, how I mentioned, 16-year-old, 300 is the lowest, 850 is the highest. Right now, this credit score is fair. So this is pretty much a summary. This will tell you all this client's information. So how long they've had credit for, what's their average account. So as you can see, when I mentioned about if you open up accounts, to see how these aren't matching. So the oldest account is 14 years, and then the average is almost 6 years. This person doesn't have any collection. In total debt, they have 38. A lot of it's coming from credit cards, and not a lot of installment loans. Accounts late, ooh, this is really big. Remember when I mentioned about payment history and how it plays a factor? This is one of those moments that it plays a factor. So this person has been late 10 times. They have 12 open accounts, so it sounds like over 95% of their accounts were late. Over 95% of their accounts were late, as I mentioned. 12. They have 12 open accounts, 10 accounts. All right. This is their credit limit. They're at 99%. So out of $24,000 they have, they're 99% highly utilized. All right, the next page is going to go over your personal information. So all the names, your date of birth, places you've worked, all that's going to be on your Experian credit report. And that means that we see it as credit analysts slash underwriters, right? So we'll go through some of these so I can show you tips on what to do on on these loans, of how to get approved or how to clean up your credit. So let's look at this person. So they opened this loan back in back of 2020. Their balance is 4,900. Their max. So what they need to do if they want to start seeing their credit increase, they're gonna want to pay down this credit utilization. Remember how I mentioned being at 30% will make sure your credit increase. This person's at 99. That's a no bueno. As your late payment that you received this year, you're gonna have to wait 7 years, unfortunately, unless it was an error, which I assume it probably wasn't. Yeah, you're gonna wanna you're gonna have to wait 7 years for that to not affect your credit score. All right, let's go to the next one. This is another credit card. Hate these ads. Why are you popping up? Okay, so the next one, this is another credit card. This is an Apple card. It was opened in 2023. Again, you're gonna have to wait for 7 years, and you're gonna need to bring down that credit utilization. Let's continue. Another credit card, same thing, credit utilization, and let that loan go through that 7 years. Look at that. Boom. This one has two. That's rough. Ooh, something's financially happening in this person's life, but it is what it is. Life does happen. So, again, this is another credit card. They're 100% utilized, and they have a big payment, and they're going to need to start paying that down. All right, let's see. Another, what is this? This is an auto loan. Here we go. It's an auto loan. Let me take a pause. Again, this is how you read this. So, a lot of this information is self-explanatory. So you have the account name, the account number that's hidden. Thank God for these purposes. Who the original creditor was. If it was a collection, it will show there. Who it was sold to. So if it said Cyprus, but then it was sold to George's debt collection, that's where that would show. It shows when the account opened. Status open, never late. Look at that. Perfect. He's never been late with this loan. Which was really nice. At least he's working it somewhere in there. All right, so we have the balance right here. The original balance 14. He's already paid down 48%. How long he's had the loan, or how long the loan is for 85 months. And this is your payment history. So that's when I'm mentioning like being 30 days late. 30 days. If we find more, you'll see it. So on this one, he's been 30 days late twice. Right? And it'll show you right here so you can understand. So out of all these payments, he's been late twice, which you would think that's not really that you're looking at that, you're like, oh, that's not a big deal. Unfortunately, it is a big deal. They just count it such a hard thing, which makes sense because that's the whole point. You're asking to borrow money. So if you're asking to borrow money, essentially, the biggest factor that they want to contribute is going to go ahead and be, are you paying it on time? So as you can see, that's why it affects your credit so much. All right, let's continue. So that's an auto loan. That's great. So if you wanted his credit to build, so far he's doing really great. I don't think there's any more he needs to do, just because he's paid off over 50% of his car loan. So he's in great shape already. So let's continue. Okay. We have a debit card. All right. This is what I think is a line of credit attached to the checking account. So this one never late, needs to pay it down to 30%. He needs to be using 30%, which in this case is going to be, that's going to be $150. So if he pays this down, he'll see his credit score increase. Late payment, same thing, high credit usage. This is an account that is inactive. No one's using it. There's another credit card. Great payments. Highly utilized. Needs to pay that down. All right, let's move on to the next. Another credit card. Late. Needs to pay down that credit utilization. All right, let's take a look here. Another credit card. One late payment. He doesn't owe anything. Look at this. Great shape. This is the first one I see. Let's give him a round of applause. Everyone, hands up in the chat. Put ones in the chat. We got to congratulate him. He's at least paid down something. All right, let's continue. Here is a unsecured loan, a personal loan. He's been late one time. He's paid down 50%. That's what I'm talking about. Let's go, baby. So he's doing great in the installment area. So let's continue. These accounts that are closed that don't affect him, so we can just skim through this. All right. So closed account, closed accounts. Let's see if I see anything here that sticks out. Never late. Okay, so as I'm looking at this is going to be a great point. As a credit analyst, would I approve this loan? If he applied for any type of loan, I would not approve him. Because he's going through something financially, so that means if I'm giving him a loan, then he has a high likely chance of not paying back. Why? Because also that's what his credit report is saying. So you see how being late can affect you. So yeah, that's a huge deal. All right, we found a collection. He has a collection. This is dragging his credit score. So if he pays it off, he'll see a slight increase because collection pays to your payment history, which it will, but only because you pay it off doesn't mean that it will now increase your credit score. It'll have like a small effect, but it's not as strong as missing your payments. No public record, so he's never filed bankruptcies or had child support, any of that type of stuff. These are the places that he has applied for and has gotten denied. And this is the good thing I like about this credit report. It tells you what is helping, what is hurting you. So what's helping? You've established credit history, which again, it's the third biggest factor that we established. The oldest account was 14 years ago. My oldest account was opened 25 years ago. Oh no, the FICO High Achiever opened their oldest account 25 years ago. He was close. Average account 5 years. Normally it's 9 years. What's hurting him? Whoo! Serious delinquencies. He's had 60 days or greater. 60 days that it was late. High credit usage. So my credit limits are 99. Or mine. This is the credit limits are at 99%. Next is gonna go ahead and be bad payment history. So again, missing those payments. So if you have one or more accounts showing missed payments, that is something. Recent missed payments that the person has had. Your let's see, your most recent payment happened 2 months ago. So that means it happened just 2 months ago based off this credit report. So you're going to have to wait that 7 years. And as months and years go by, you'll see that as long as you don't continue letting things go delinquent, etc. So that's essentially how to read a credit report. So go ahead, put some questions in the chat you have about building your credit. I'll give it about 2 minutes. If I don't see anything, I'll move on to the next subject, which is going to be talking about what lenders look for when it comes to approving for a loan. So I am going to go over both a auto loan of what they look for and also a personal loan, or auto loan. So put them in the chat. Your questions. We'll give you 2 minutes. So here it is 9:21. I am at the Eastern time. So in 2 minutes we will do that. All right. So while I do that, I'm gonna open up these credit reports. Boom. Mm, 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 mm. Doom. 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 Mm. Alright, I don't know. It's responding. Not what I was looking for. Close. Whew, I ain't gonna lie, I want some pizza. That sounds nice. I've been itching for some pizza. Alright, let's see. Here we got less than a minute. Put your questions in the chat or forever hold your peace. All right. Here is we got a question. Let's go. Jason, I want to refinance my home. What can I do? What can I do if my credit is at 500? We're gonna put that to the top. That is a great question. So let's answer this here quickly for Jason. Thank you very much for your comment. Let's go, Jason. All right. So essentially, so you have a bad credit score. So what needs to happen at this point, Jason, is we're gonna go over a credit report, so you can see. So what I'm saying makes a lot of sense. So if you do definitely have that, what you need to do is get with a lender that works with a low credit score. Um, Normally, your credit unions will go ahead and help the community because that's the whole point of a credit union. So ask them if they do any of their loans in house or portfolio. Portfolio is pretty much that they keep the loan and they don't sell it. So as opposed of what's on your credit, if you're past due on any of your loans, you're gonna need to start getting current. That is a huge factor when a mortgage underwriter or a credit analyst is looking at it. Is are you current? And with mortgages, here's a nice secret. Everyone, write this down. If you've had more than 130-day late on a mortgage within 1 year, they will decline your loan. So if you're running into that issue where you're past due, that will affect you. And it's worse when you've been past due on your mortgages. What you can do to counteract your credit score, because really it's going to really come to a lot of payment history and how recent you've been delinquent, because they're going to want to get a letter. You're going to want to explain yourself, be honest about it. If you're going through a hard time, you're going through a hard time. That is fine. You just have to make sure you disclose it, but that is something to be prepared. If you are approved, they're going to ask you for the reason why. How do I know that? Because I am a mortgage, well, I was a mortgage underwriter. Now I'm just a consumer loan underwriter. I used to approve loans for mortgages. So when people were delinquent or had delinquencies, we had to ask, what is the reason? What you can do. So what you need to do is you need to start hoarding cash. If you have assets like maybe you have some stocks, maybe some bonds that you have, you can use that as collateral to offset. So what you want to do is you want to clean yourself up really good. Think of it as, Jason, as you're going to a job interview. You're trying to look the best presentable. You may have maybe lied on your resume, right? But, or maybe you were at your job for a very long time. So you're going to try to do things to compensate. That's the same thing with when it comes to loan application. What are the compensating factors? So if we're focused on that, so if you have assets that can be used, so assets can be anything such as cash in the bank, stocks, bonds, your 401ks. If you have insurance that has cash value, those things can be used as collateral when it comes to offsetting and having compensating factors. Next, if you have a rainy day fund, that will help a lot. And if you definitely have a 500 credit score, I would say try to save 3 to 6 months of your mortgage payment, so you can be like, hey, I know my credit was bad, but I got 6 months saved up though. How? Why would we tell you no? Right? Again, you're making yourself look presentable. A next thing that you can do is decrease your debt to income ratio. So a debt to income ratio is a measure of metric that we use to determine, because it's just not about, Jason, about your credit. It's also, can you pay back the loan? Because again, people go through financial stuff as, we're going through the economy. Everyone's going through a financial hard time. So, it can be acceptable, but the thing is how are you going to reassure us, me as a mortgage underwriter, Jason, how are you going to reassure me that you're going to repay the loan? So if you're not familiar with what a debt to income ratio is, I'll go over that here right now. And to everyone, Jason out here asking great notes. He's asking great questions. We gotta give Jason's hundreds. Jason's out here pulling out all the best information out of me. If you guys have any questions so far, Jason, while I get this pulled up, is what I'm seeing makes sense? You can put one in the chat. You can put yes. And again, anyone that's new to the stream, thank you so much for coming. Subscribe, like. If you're new to the channel, I have plenty of content that you can listen to. And this is one of the moments when I go live. This is your opportunity, like Jason is doing. Jason is seizing the moment. He's like, hey, I need help with my credit and I need to get a mortgage to refinance. How do I do that? Seize this moment. So is also Yerika. She's seizing the moment to ask these questions. So don't be afraid to ask the questions. Again, if anything, no one really knows who you are. So it's like, don't be afraid, just in case, maybe you'll feel a little silly. I've been there. So you're welcome, but the information isn't done, Jason. The information isn't done. You had a question, I'm gonna answer it. If there's something that you don't understand, Jason, feel free to continue asking me, or I'll put this in the chat. I'll put my email, and we can set up a consultation, and we can talk about it a little bit more, and where I can go ahead and help you one-on-one, just in case if you're not able to stay on the stream for very long. Here is my email, Jason. If you want to go ahead and send me an email, I can get back to you. It is overwhelming because it's a lot of information. So the great thing is timestamp where you came in, Jason, and remember, you can always rewind, or you can set up a consultation with me one-on-one. I'll take some time, make sure that you understand that. That is going to be George, the credit expert at gmail.com. I'm going to pin it up right now on the chat so you can see that. Boom. Right there. And if anybody needs help with their credit, you know what to do. Like, subscribe, comment. Seize the moment, people. Seize the moment. All right. So going back to what I'll do is because since it's a lot of information for you, Jason, I'm gonna hold off then doing the debt to income ratio. I don't want to then continue overwhelming you. Were you able to see, Jason, the email that I placed? Uh, all right. Okay. So continuing on. All right. Let's see. So Jerica had a question. How do I best prepare to make sure I get approved for a second home? Oh, Jerica, she asking great questions. You two are definitely. That's a great question. How do you get approved for a second home? But just applying. Just apply, jerk. Just apply. It's that simple. Just apply. Okay, it is not that simple, unfortunately. Okay, so if you're getting a second home, we're gonna we're gonna break this into a nice little category. It is going to be so if you want to get approved, first you got to do is you got to make sure your credit score is at tip shape. I'm not talking about that you need to be at a 700. If you have a 650 credit score, you can get away with that. You're just going to pay higher interest. You're going to need to put down a 10% on a down payment for a new for not for a new for a second home. Or if you want, here's a trick, a hack. Can you hack it? Let's see. So here's a trick. So what you want to do is you want to go ahead and apply and say that's going to be that your new primary residency. So essentially, by doing a brand new primary residency, that changes you from having to do 10% to a 3%. See how that just drastically just reduce it? So by just doing that, you were able to go ahead. Ooh, I noticed I was there. We go. Um, I noticed that you're now going to need to put down a less down payment. So let's just look at a house that's for $100,000. 10% down would be 10,000, and 3% of 100,000 would be 3%. Imagine that. Look at that difference. Saving 7,000 because you're going to claim that this is going to be your new place. That's going to be another one. You're going to want to have a rainy day fund. You're going to need to have at least up to about 3 months, or maybe at least a month. It really depends on where your credit is, essentially. Um, but you're going to want to have at least 3 months. Uh, Something else that's going to work, if we're going to talk about credit wise, again, not being late in the last 2 years, preferably. Your current on your mortgages and your installment loans, so like your cars, your personal loans, your debt to income is another factor. So making sure you're able to repay back the loan. If you want to take notes of this, Jason, I'm going to go over the debt to income ratio just because it is required when you're going through a mortgage. Doesn't matter if you're buying a new house or refinance, there's always a debt to income. So essentially, let's take a look here. So if you were going to um, calculate your debt to income ratio, write this down. You're going to want to um, grab all your debts that are reporting on your credit report. This is your credit report only. Please do not include your car insurance, grocery bill, subscription. Yes, that is, I'm going to say it's a form of debt because without food, you don't live, right? So it is some kind of, it is some kind of debt if we look at it from that perspective, right? Um, those things don't count in it. So let's just play a nice little example. Let's just put a random number in this calculator. This is going to be how much debt a person pays per month. All right, so let's see if this person pays 1,564. That's how much they pay between their credit cards, car loan, personal loans, boat loans, jet ski loans, and all the other fun loans. Now you're going to divide it by your income. Let's say if you make that. Ooh, that was just a random number right there. 8,461 or 65. And you're going to want to do equal. And then you're overwhelmed with what you see. You're like, whoa, 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 whoa. This is all what you have to. This is all that matters. The zero, the period, and then these two numbers, and then this number right here. Because again, how we learned in school that if it's over 5, we round up. So this is under 5, so it stays at 18. To make it a little bit easier, if you want, you can do times 100. And this is essentially what your debt to income is, 18%. So again, this is all the debts he pays, and he's at 18%. You never want to be over 50%. So what is that? Let's just say this person had 5,000 divided by 84, 65 equals 59. You don't ever want to be this high. Anything over 50 will go ahead and most likely get you a decline, and especially if you don't have a high credit score. Because again, just like how I was mentioning, it's a Jason Jerica. You want to look as presentable as possible. So if you have negative things, how are you going to compensate for it, right? So hopefully that made sense. Bro, are you legit? Yes, I am. If you start in the beginning of the if you start in the beginning of the stream, you'll see my credentials. So I've worked at banks, credit unions, financial institutions. I've approved for mortgages, home equity lines, autos, personal, boats, RV, jet skis, motorcycle if I didn't say that, RVs like little side by side or maybe like the three-wheeler motorcycles. I've done a lot of the type of loans that you would normally go in that you apply for. The only thing I don't have a lot of exposure is business and commercial. But I am working on it. You know what? Just to do this, millionaire, I'm about to show you. This is how legit I am. Okay. This is what happens when you show up to the chat. Because you're about to see what is known as a underwriting guideline. I'm going to let you guys into my world. Again, there's no one doing this like me. Let's go. Put likes, subscribe if you're new, put your questions. Again, I want you guys to take advantage of me. Okay, that was a little too much. My bad. My bad, that was a little much. But anyway, take advantage of me and ask me questions. Millionaire 001. If you need some one-on-one consultation, I pinned my email. Reach out to my email and we can set up a consultation one-on-one. I'm going to be one of the most affordable people that comes with years of experience. I've been doing this for over 10 years. I think I have like 12, 13 years. I started back in 2013. Yeah, that sounds about right. We're in 2025, so that would put me 12 years. Yeah, I've been doing this for 12 years and strong. Let's go. But without further ado, let's and then if you want to, just in case if you want to look a little, to sell a little bit more of how legit I am, this credit report is what people like me, a credit analyst or a loan underwriter, sees. So this is something that I've never ran into any YouTube person, especially that does credit, show a credit report that the lender sees. This is literally top information. This is like secret information that I'm providing to you guys. So hopefully you're able to see the legitimacy at least off that. But let me get this guideline. Because again, I have a lot of guidelines for a lot of one. What I'm going to do, just for you, Jason, I'm going to pull up a mortgage one. And we're going to give you some inside secrets. Give me a moment. My computer's going through. It's going through its thing. I'm trying to wait for it. But anyway, so hopefully, millionaire, you're able to see how legit I am. A lot of the information that I do is I give secrets because again, I want you guys, bro. What if you're bankruptcy? This is the great thing about bankruptcy, or I guess this is the not the catch 22, but the the light at the end of the tunnel. Whew, that took me a lot to say. Is once you're going to bankruptcy, you're at low of the low, essentially. Sorry to say, millionaire, but essentially, like when I say you're low, like you're at a low point with your credit, right? It's all gonna be up from here. The great thing is that a lot of lenders have a lot of lenders have a lot of now a lot of lenders that help people that are in bankruptcy. There's this company called um, Credit One. They work with bankruptcies. I think My Total Visa. Don't quote me on that one, but I think Credit One. They're a credit card company. They help. You know, that's why they're there. They're there to help people that don't have the best credit. There are lenders like Credit Acceptance. There's Westlake Financial. There's Arrivo, where I've worked at. There is trying to think of another. There's one called JD Bywriter. They're also another lender that helps with people that have not the best credit. So those are for like auto loans. There's one called Iron Horse. I learned because I applied through them like a couple years ago. They do RVs, so it looks like they also go ahead and um, help people. But the catch to those type of lenders is that you're going to have a higher credit score. Some credit unions like work with people that have bankruptcy, but they want to see that your credit has been reestablished, millionaire. So hopefully you're able to see that. Like at my credit union, they want you to at least be between 1 to 2 years of your credit being reestablished before they're willing to give you a loan, right? So again, it never used to be that way. It wasn't like that 10 years ago. Like a bank would not want to touch anybody that was in a bankruptcy, and there wasn't a lot of lenders that would help people get a go ahead and get loans if they've ever been through a bankruptcy. Guys, put likes in the chat if you have not. If you're new to my channel, welcome. I am George. That is my name. For everyone that was maybe wondering, I am a credit analyst slash loan underwriter. I approve loans for a living. It's what I do on my day to day. All right. So Jason, back to you. Okay. So here's my legitimacy for you, millionaire. So this is a underwriting guideline, and put a 1 in the chat, millionaire, if you understood what I said, or if you need me to repeat anything, feel free. I'm here to help you and Jason and everyone. Anyone that needs actual credit help, that is why I'm here. Exactly for you guys. So again, like I said, take advantage of me. Let's go. All right. Without further ado, let's look at this guideline. What I'm going to do is I'm going to kind of hide the lender. Because again, in order for me to make sure this information can stay out there available, I have to protect these lenders, unfortunately. If it wasn't for me, I would just say, F it, let them burn, right? So, but unfortunately, I don't also want to get barred from doing this because it can happen. But anyway, all right, let's get to it. I've been kind of stalling enough. All right, so here we go. So this is for you, Jason. You mentioned your credit score was within this range. So you're looking for a simple refinance. As you can see, the minimum credit score to get at least through this lender, I've seen lenders be less. Like, look at this. If you decide that you want to buy a home, you got to have at least a FICO score of 580. If you're gonna do a refinance where you're not taking any money out, they want you to be at a 580, and this only applies to people that have 1 to 4 unit homes. So think of your single family homes, duplex, which are 2 family homes, uh, triplex, which are three, and then a quadplex, which is four. Normally, the max loan to value, which loan to value means how much of the value they're willing to give you based off the value of your house. So if your house is worth 500,000, they're willing to at least give you a max of 97.75 for whatever reason. So think of that as being, I guess, what would be 97? I was like 97%. I'm gonna say it's like 495,000. Let's just say this. Let's do it right here. So if your house is worth half a mil times 97%, that's how you can find it. So the max they would give you is gonna be $485,000. So that's how you find it. You just do 500 times the max LTV. The standard is 97%. You will run into a lot of that. That's where they tell you, hey, put the 3% down. That means because they're financing 97%. So just wanted to do that tad a little bit. So, and then the CLTV is combined loan to value. So that is when you have a home equity. So let's say if you bought this $500,000 house, right? You bought this $500,000 house, and let's say if you owe $250,000, that means you're at 50% LTV. But let's say you're if you have a $100,000 home equity line of credit or a home equity line loan, which is pretty much where you take out the value and the equity of how much value the house has. Let's see if you do 100,000, that's gonna add an additional 100,000 to the 250. Now you're at 350, and the house is valued at half a million. So now you just jumped up to 60%. So that's pretty much essentially what what combined loan to value or combined LTV is. So hopefully, millionaire, you were able to see how legit I am. Again, this isn't the only lender I have. I have for auto loans, I have for boat loans, I have for RVs. I got all the rules. I got all the rules for everybody. So hopefully I was able to, show you my credibility. And if you're new, millionaire, please look into subscribing. I have plenty of content. I'm doing it on the daily. I try to at least go live once a day. I'll try to even go during my lunch, just to answer strictly questions. So if you guys have more additional questions, definitely subscribe. Hit the ring notification, because if you don't hit the ring notification, it's never gonna truly notify you that I'm live or I post a new video, a new short, etc. So, yes. So I'll be going if Jason and Millionaire have any additional questions. I'll be live around 2:30 Eastern time. So that means I'm on the East Coast. So if it's New York, so if you live in Texas, that's an hour of a difference. If you live in California, that's 2 hour difference, right? Just in case. If not, again, remember, I pinned my email. Contact me through the email, and I can go ahead and help you out. Okay, so, what's your LinkedIn? Yeah, I can't. Yeah, I'm not gonna give out my LinkedIn. I was like, there are certain lines that I'm not willing to cross, and that's gonna be one of them. I can't have people finding me in general. It's just to protect myself, and again, not a lot of this information is readily available, so I want to try to keep it in anonymity. I want to make sure it's kind of like a lot of people know who I am, but not a lot of people can find me. Because what tends to happen is information like this gets shut down. Sorry to go through a little maybe a conspiracy, but I do have that type of conspiracy in that type of worry that will go ahead and happen. So I don't want this to to be stopped. So I why stop the money train, right? So um okay, there was another question from Aiden. How much do I need to save for a car? I would say 20 to 30%. Especially if you're 18, I would try to push for 30% of the value of the car. So how I mentioned how to find that. Um, so yes. So let's say if you wanted to buy a $10,000 car, which $10,000 car, depending on how you make, if you're making $5,000 a month at 18, congratulations. I'm gonna be really happy for you because I didn't even make that. I'm doing my best to be happy for you. But if you make that much, I can see a $10,000 car not hurting your pockets. Um, I would try to stick to something under $7,000 to get finance. What's my TikTok? My TikTok, it is credit recovery dot. I think. If anything, I will find it and put it in the chat, and provide that. So yes. So if you finance, let's go back to how much you need to save for the car. So if you finance $10,000 car, or 30% would be $3,000. And again, how you do that is you grab the amount that you want to finance times 30%. And if you do that, that means you're only financing 70%, which to people like me, I'm like, I gotta give them the loan. I gotta give them the loan before someone else gives them the loan. Like, we love those type of deals where people put 20, 30, 40, even sometimes half percent down, especially if you have bad credit. This is another crumb. Ooh, this is a nice information for you to put down. If you don't have the best credit, if you're somewhere in the 600s, 500, 400s, by putting at least 40 to 50%, unfortunately, you're going to have to put more down because, again, you're a lot more riskier, and it depends on how soon it was. If it was something within 12 months, I would definitely urge 50%. We're going to look at you side-eyed. We're going to be like, if you have to put down on the vehicle, why didn't you do that before? Like, why do you let that loan go bad? So, it's like, it makes us look a bad way when you're looking at your credit. So that's a nice little insider information from a credit analyst when we're reviewing your loans, right? Um, so that's essentially when it comes to that. So let's go ahead, and those are all the questions that I've seen. I don't see any more questions. So let's hop into. Oh, there it is. Thank you, Jerica. I will pin that bad baby to the top. So everyone that wants to find me on TikTok, credit dot recovery, and you'll be able to find me there. All right. So the last thing we're gonna go ahead and do is we're gonna review through this credit report. We're gonna look at the habits of someone that has a 800 credit score. And again, you're not gonna be able to find this information nowhere. Oh my God! If you're new to the channel, hit that like, subscribe, ring notification. Let's go. No one's doing this like I'm doing it. Ain't no one doing this like I'm doing it. I'm doing it. Okay. All right. All right. Whew. All right. Serious. This is a serious channel. God, I'm always playing around. All right. Let's get to it. All right. Do you small loan lendings of 100? Do you small loan lendings of 100 to 500? If not, when? Do I? Ooh. If you're talking about me, I don't have a loan business. That's actually in the works. So hopefully I'm able to do that. Um, let's see. So, if not when, soon. So, so let's see. I have a high school student who wants to build credit. What they want to do is get on as a credit authorized user, where ask their parents to put them on it only if they have really great credit. If their credit score is 720 and above, he needs to ask them that question. Because if they have a low credit score, there's no point. That's just going to hurt them. Because if they miss payments on whatever card they're going to put them, it's just going to drag them down. And that's not how we want to start. That's the difference of putting your kids on as an authorized user. You have to make sure to put them on responsibly. So, and then get a secured credit card. A secured credit card where they cough up 200 to 300. They gotta pay to play, unfortunately, unless they wanna go down getting the car route, which they still have to pay to play by pulling a higher down. I would suggest doing a credit card, $200 to $300. Save up for it. They're gonna give you a credit card, and they're gonna start reporting it to your credit agencies like Experian, like I mentioned earlier, and that's how you're going to start building your credit. All right, okay, let's take a look at this credit report as the last thing. So this is the habit of someone that has an 800 credit scores. So this is going to be a little different. Let me know if you guys can see my screen. You guys can. Okay. All right. So this is what a habit of an 800 credit score works. I'll break this down easily. I'll start off with the summary before we go on to a full breakdown. So as we can see, so the most important thing when it comes to having an 800 credit score, write this down, my people. Write this down. Credit history. So having five, I would say not 3 years. I would say 4 to 5 years of having positive credit. That means you've never missed a payment, had a collection before. Your credit utilization isn't over 30%. You don't owe a lot of debt, right? So essentially, those are very good. Those are very good. Those are very good indication of someone that's going to have an 800 credit score, and that's what you're going to see here. So let's take a look. Okay. So here's the 800 credit score. How do we know he's an 800? Let me see. Do I got a marker? I do got a marker. Give me a highlighter. Okay, not the type of highlight that I want. Okay, let me see. Is there better? What's this? No, let's add my signature. I don't want to add my signature. I'm not trying to do that shit. Okay, hold on. Let's go back to technical difficulties. Okay, let's close that. Okay, let's see. Let me answer some questions while I actually get this pulled up again. Can a high school do a loan for 50 to 100 and report it to their credit? No, unfortunately. If it was, your kids would probably be getting it through the mail. Hey, apply for a loan. The reason why I say that, sorry for the sarcasm, it's just, I just think of it funny because I know lenders would do that to kids. If they could really make kids open loans and sell to them, like other things that happen in this world where they try to advertise to kids, I wouldn't be surprised if there was a kid that had a loan. But to answer your question, no, because they don't have the mental and the legal capacity of understanding what they're signing for, because they'll easily give them like a 30% interest rate. We're like, oh yeah, you got that? Do you got a job? Oh yeah, you got a job. You don't make a lot of money. Okay. Let's see. Sorry, where the? No, that was just recent. Where are you? Let me see. We should collab. I teach high school students how to build a career. You got my email. You got my email for sure. We're gonna need a collab. Oh Jesus, yo, that is a dream come true right there. That is definitely a dream come true. Hit me up at George the Credit Expert at gmail.com, and we'll do wonders and change the world together. Let's do this, Jerica. Let's do this. Okay, let's see here. Da-da-da. I am so sorry. Here it is. Oh my god, I can't believe it took me that long to find it. Embarrassing. Nope. We're gonna open through Google. It's gonna be a little bit better. Do that. And okay, I'm sorry, you guys, that I've taken so long. If you were 18 years old, what would you do if you can't become an authorized user? I would get a secured credit card, and I would save money for a loan, for a car loan. You're not going to be able to get a lot of personal loans because they don't trust you. As a person that's 18, you have no experience. Think of it like life experience. Think of it as like a life experience. If you don't have a certain life experience, then you won't be able to have the wisdom and the knowledge of how to get through it. So let's do this. Let me zoom in. Okay, let me zoom out. Make sure you guys can see it. Hopefully you guys can see it. Let me see if I put myself smaller. Haha, there we go. Okay, so this is a nice little credit report. Okay, so this is the habit of someone that has an 800 credit score. Again, how we can tell. Where's my magic marker? Give me a highlighter. Let's highlight this. Yeah, yellow. Yeah. Boom. Oh, highlighter. Let's go. Let me see. I got a question. Let me see. Is it bad for your credit when a company closes your card account for not using it? It is. It is. It's bad. Why it's bad is because what happens is that it lowers your credit age. So how long you've had credit for does play a factor. It counts for the third highest factor of your credit score. So if your accounts are being closed because they're not being used. So if you had them for 3 years, 4 years, that's gonna your credit score is gonna take a good hit. Not like a oh wow, like you went from maybe like a 700 to a 500. No, like maybe you'll decrease 10, 15, maybe 20 points. Is my predicament. Just because you no longer have that reporting. If you opened it up like 6 months ago, it's not gonna hurt your credit the best. So we're gonna go ahead and pin that question. I like that question, Francia. Thank you. So if you guys are aware, here's some hundreds for Francia. Let's go, Francia. Let's go. We'll give you some hearts too. Heart it up. Everyone gets love. Let's go. Okay. So going back to this funnel credit report. Okay. So that's how we know he's at an 800 credit score, FICO Classic 8. Okay, let's point some things out. He's never had any bankruptcies, which is really nice. That's here. He owes in total of 124. So those installment loans that I've talked about. Yeah, he owes 124. We're gonna see where that comes from. His mortgage, he has a mortgage of 247, and credit and total credit card debt he has is 9,800. So as you can see, um, he doesn't have a lot of credit card debt. But again, to we don't know how much he has in limits. Here's a great indicator that can tell us total rev available. That means total revolving available. So out of 100%, he's only used about 11%. So he has 89% available when it comes to the his to his credit utilization. So he's at 11% credit utilization, which is mwah, beautiful. Okay, let's look at inquiries. He doesn't have a lot of inquiries. We know that plays a factor because that's the fifth uh, the fifth part of your credit of the credit algorithm. He has a total of 26 loans. That's what trade lines means. He's never been late. In the last 7 years, he's never been late. That's what this section is. Now, Del slash derog. That's short for delinquency slash derogatory. And he's had credit since 2003, since July to be specific. So, as you can see, this is a summary of how he's had why he's at an 800 credit score. Now let's start getting into the things of it. Let's look at some of the loans he's paid off and some loans that are still open. So it's going to start from closed account to open accounts. So let's see. We're going to focus on the loans he's had more than 2 years. So he's had this mortgage. That's what this is. This is what RF stands for. That's pretty much a mortgage. You can tell by the years. Had it through Bank of America for over 8 years, and then it got transferred. So pretty much he must have refinanced at some point. That's really long-term history. And as you can see, in the last 2 years, that's what the C's. The C's means current. So that means he's never missed a payment. We can only see 2 years of accounts that are open. But if you missed a payment before, it will go ahead and be able to show you. It would show us, is what I'm trying to say. Okay, let's see. We don't care about that. Auto loan. Nope. We don't care about that. Nope. Okay. He had a loan through a credit union for 41 months. It was an auto. AUT is short for auto. He had 41 months. That's an installment loan. So right now we're able to point out a mortgage and a auto loan that he's had over 2 years, which again, he's playing the part of the installment loans, building his credit, right? Let's see. He's had so I guess it might be a she or he, doesn't even matter. Nowadays it doesn't matter. They had a credit card through Victoria's Secret. How do you know? Rev that's what that stands for. He's had it for 5 years, 60 months. He opened it in March of 2015, and it closed in February of 2020. So this is when Francia mentioned about the creditor closing the account. So they closed the account. So credit grantors request. So they said, hey, they must have saw, again, they weren't using it. So they're like, we're just going to close it. We're not making money off him. That sounds like them. Here's another one that was closed due to not using it. This one was an Amazon credit card. He had it for 68 months, which ends up being over 5 years. So you see, we're seeing essentially installments and revolving. You see how he's at a 800 credit score. Again, let's take a nice little pause. No one's doing this like I am. Ain't no one doing this like I am. If you're new to the channel, go ahead and hit like, subscribe, and hit that ring notification for to always stay up to date with your credit news and get the best information possible. Yes, I had a bearing fart. Yes, that is normal. Stop playing with me, people. Stop playing with me. Okay, now I'm just inside my head. Okay, so now we're going to go into the open. So these are the opened loans, and these are the open loans. So this is where it's going to matter. All that stuff right there doesn't matter. Let me actually do it so you guys can see it. So the stuff that's open, that you see here that says open, that is what matters now. Everything else was paid before. That don't matter. This is what matters now. So, all right. So let's look at. So this is his credit card he has with Amex, which is American Express. He is under 30% because 30% of 6,000 would be 2,000. So he's almost reaching there to the 30%. But as you can see, really low credit limit, never late. We can see why he's at an 800 credit score. Mortgage, he's had it for open 5 years, never late. He's had, never late. Another credit card, low credit utilization right here. 110 is what his balance is. He's had it for 4 years, never no late payments. See, and as you can see, it's just a recurring theme. The zeros mean he's never had a balance. As a FY. See? Look at this. Low credit utilization. Look at this. A $34,000 credit card. Whoo! Whoo! Wouldn't you want to have a $34,000 credit card? Well, you can if you subscribe. Let's go. Because I'll teach you how to get there. I will teach you how to get there. Stop playing with me. Yeah, so like, subscribe, put your questions in the comments while I'm live. Yeah, that's how you do it. Let's get it. So let's get back to it. We're almost done here. So yes, so a lot of it's just a lot of recurring themes. Never late, low credit utilization, and having it opened for X amount of time. Look at that. That's a simple formula to follow, and it doesn't have a lot of credit inquiries. It's that easy, but it's not. The reason why it's not as easy is because you don't have me. You do not have me. So if you're new to the channel, go ahead and like, comment, subscribe. Let's go. No one's breaking this down like I am doing it. Let's go. Let's go. Well, guys, thank you so much for your time. I'm so glad I was able to answer some great questions here today. I appreciate you. Again, if you're new to the channel, like, comment, subscribe. This was really fun. I had a great time showing you guys how to build your credit. If you have any questions about how to build your credit, go ahead and either comment on this video, reach out to me at George, the credit expert, at gmail.com, and subscribe to stay up to the most latest credit news, tips, tricks, hacks, all of it. I got it. I'm here for you. Thank you very much for watching, and I'll see you guys on the next live.